Thank you so much and welcome everyone. My name is Zvika Shluper. I'm one of the co-founders of Oz Capital MIC, along with my esteemed partner, Oleg Shiller. So Oleg and I have started Oz Capital MIC several years ago. Give you a little bit of background on myself and Oleg. Both Oleg and I come from very humble beginnings. Immigrants coming to Canada. I came to Canada in the late 80s, or Oleg came to Canada in the early or mid 90s. Both of us got into the financial services field early in our career and have found an affinity in this field. This is an area that we both particularly liked. I myself have been a financial planner with BMO, worked at TD Waterhouse as well, and really got into the mortgage industry in 2005. Oleg was in the industry already for a couple of years, so obviously both of us have lots of experience in the field. One of the reasons and a little bit of a story behind it that we got into this field and specifically into the private mortgage field, later on into the mortgage investment corporation area, was just thinking about and seeing the instability in the markets. When I used to work at the bank, we used to have lots of clients that would come in and talk to us about their investment portfolios. And what we found was that they're always up and down. Mutual funds are unpredictable, same with stocks. Bonds, although were far more predictable, tended to provide a yield that was somewhat too low for a lot of our clients at the bank. Same goes for my parents, who obviously we all care about our parents and family deeply. They were always complaining to me about their portfolios going so far up and so far down, where they didn't really know or have a plan for their retirement. At the same token, I did have a few clients of mine at the bank that were in this field and were talking to me about that, and really got me thinking about the stability behind private mortgages, and especially the stability behind a strong mortgage investment corporation. So this is really why and how we got into this particular field. The reason we do this, obviously, is we want to help people. We want to help people like our parents, like our friends, like our families, that have a need and a desire to achieve predictable returns and reduced risk. I'll take a moment and introduce our team. Again, I'm Zvika Shluper, one of the co-founders. My partner is Oleg Shiller. We also have Chris with us, Chris Supa, who's our marketing director. And of course, Denis Rudenko, our national sales director, and the person that's going to be running this whole presentation today. If you just want to go to the next slide, Chris, and I'll just tee everything up. So we're going to have a quick overview of Oz Capital MIC. Basically, again, who we are, what we do, a few case studies that refer to TFSAs, RESPs, and RRIFs. These are all great vehicles to invest with us in the MIC. And Denis is going to proceed to actually explain the process of investing with Oz Capital MIC. We'll be happy to answer any questions you may have thereafter. Denis, off to you, my friend.
Excellent. Thank you so much for that, Zvika. And thank you, everyone, for joining us here today on this busy Wednesday afternoon. As Zvika said, my name is Denis, and I'm the head of sales here at Oz. I'm very excited to talk to you today about why we do what we do, how we achieve our impressive results, and how you can benefit by working with us. On Zvika's note regarding questions, you guys will have an opportunity to ask us after, But if you do have things that come up as you listen to me speak about the various case studies and whatnot, please feel free to add those questions in the chat or send them along to us. So I wanted to start today on a quick personal note. My parents and I immigrated to Toronto back in 1993 from Kiev, Ukraine. At that point, I had no idea why we moved halfway around the world to start a new life. All I knew is that it sort of terrified my seven-year-old brain to go to a place that sounded like it was full of, giant hairy spiders. I guess in my mind, Toronto equaled tarantula. Anyway, as I got older, I realized that we moved here to actually deal with some health issues that I'd had as a child that would be better dealt with in a country like Canada. So my parents were actually here with us today, watching, gave up everything for my benefit and continued to do so well into my late teens, 20s, 30s, and who am I kidding? They still support me today. They're both now in their 60s, still working but nearing retirement. And I often feel that it is my duty to ensure that they have a comfortable retirement after all the sacrifices that they have made for me. So as things get more expensive, I worry about their savings lasting well into retirement. They probably don't know that I worry about this, but I guess they do now. And affording them the same level of comfort that they've provided me all these years. Stability is key as we get older, and I can tell you that Oz Capital is going to play a pivotal role in providing that stable retirement. Now, you all have probably had a chance now to read what's on the slide in front of you. There's one word that jumps out at me on that slide, and it's a scary word. Now, let me tell you a quick story from yesterday, and this is a true story, about unpredictability. So we have a farm up north of the city, as well as a condo in the city. We kind of go back and forth. I like spending a lot of time at the farm because it's quiet and peaceful. So yesterday morning, I was taking a quick shower just before a client call. I was up at my farm. My partner, Christine, had left for a conference in Toronto. Halfway through my shower, I hear one of our dogs start barking like a maniac. So I tried yelling for her to stop, but the urgency in her bark made me angrily jump out of the shower. I wrapped a towel around myself and ran sopping wet into the living room to yell at her. Now, it turns out she was barking for a pretty good reason. When I looked out the window next to my driveway, there was about 10 cows trying to snack on some freshly grown grass. Now, I thought to myself, those are some funny looking donkeys. We have donkeys. Wait, I don't have any cows. So, long story short, it turns out my neighbor's cows from about 1 kilometer down the road had escaped their enclosure and decided to have a nice breakfast on my lawn. With the help of another neighbor, we soon had them running back up the road, back in their enclosure. Now, this was unpredictability. I was a bit late for my client call, but after I told her why, we had a good laugh and it was all good. So unfortunately, this type of cow unpredictability is something that we can't help you minimize in your life at Oz. But when it comes to your finances, this is what we at Oz Capital bring to the table. A predictable, uncomplicated, conservative alternative investment fund that is backed by real assets in the form of residential real estate in Ontario. Our goal is to bring peace of mind to your finances. Now, let's take a quick minute to understand what a mortgage investment corporation is and why MICs have grown in popularity with borrowers and investors in recent years. Look at this beautiful chart. Do you understand it? Of course not. I don't blame you. Look, simply put, a MIC is a pool of investors' money invested in a portfolio of mortgages. MICs can lend on a variety of properties in Canada, and they offer investors the opportunity for a diversified asset-backed investment. The interest, which is earned on that portfolio of mortgages, then gets passed along to the investors in the form of monthly distributions. And as I said, although MICs have been around for many years, since 1973, it's only recently that they've grown in popularity and use. The main reason behind this surge in popularity is something called B20 legislation, which was first introduced in 2012. Now, I'm sure you haven't heard of that, but has anybody heard of something called a stress test? I'm sure you have. Simply put, it became much more difficult for individuals to qualify for mortgages at banks. This created a great opportunity for alternative lenders like Oz Capital, as we are able to look at individuals on a case-by-case basis and not just tick off boxes on a bank form. People need creative financing, not restrictive financing. So, while every investment you make has some level of risk, the key is being compensated appropriately for the level of risk and having a partner in place to make sure that those risks do not outweigh the benefits. So how does Oz ensure our investors are in good hands? Well, our philosophy is that everything starts with the people. Our key people have over 65 years of combined underwriting expertise. Both of our founders are former mortgage brokers, and our head underwriter has many years of institutional style underwriting experience and has also led a credit department for a major bank. Since bad things happen to good people, or put another way, everyone can have a bad day and miss something, we ensure that nothing slips through the cracks by having our top 3 sets of eyes on every single deal that we underwrite. Now, let's talk a little bit more about a few other ways in which we ensure our success. We lend on liquid residential real estate. What do we mean by that? Well, we lend on urban and suburban homes that look like other homes on the street. Now, I'm not talking about the color of the siding or the bricks of a particular house. I'm talking about homes that are easily compared to other homes in the neighborhood and are easily valued, which makes it easy to market and liquidate those homes in the event we have to. We also only lend in the province of Ontario. Ontario is the most lender-friendly province in Canada. Why? In Ontario, a lender can trigger the power of sale process 15 days after non-payment. Now, in practice, we at Oz try to work with our borrowers and get them back on track to make payments and achieve their financial goals and their home ownership goals. But if things don't go according to plan, we have the power of sale process to fall back on. We also only lend on short-term loans, 6 to 12 months maximum. This allows us to pivot very quickly based on market conditions. So, in other words, as things change, we quickly change our lending criteria to either take advantage of favorable conditions or to reduce the risk in the portfolio. Because all of our loans are short-term in nature, it's important for us to make sure that borrowers have a clear and achievable exit strategy after that deal is done or after the loan is done. So whether that means that they're selling the property or improving their credit, or perhaps they'll refinance with a more traditional mortgage lender. And the last point I wanted to make here about our risk management is probably the most important, the fact that every dollar is secured through real estate. And I would argue some of the most in-demand real estate in the world. So hopefully now you all have a much better understanding of what a MIC is and how we manage the Oz Capital MIC. And here are the results. Steady, reliable income. Month after month, year after year. This is what we mean when we talk about being able to sleep at night. This chart shows the Oz MIC versus a basket of North American stocks and a basket of Canadian bonds. So thinking back to my parents' retirement and my worries about it, I would much rather have their money growing steadily with a product like Oz MIC rather than doing this up and down as markets move up and down. So let's shift gears a little bit and focus on you, the investor, and some case studies, some ways in which our investors use Oz MIC for their benefit. So we'll look at a few different real scenarios, and we're going to start with the first scenario, which is the TFSA account. One of the most powerful saving tools available to Canadians today. A tax-free savings account allows your money to grow with no taxes eating into that growth. I'll repeat that. It allows your money to grow with no taxes eating into that growth. The chart you see in front of you shows the power of compound returns in your TFSA. It also makes a pretty powerful claim. Become a TFSA millionaire. Now, this scenario assumes a few things, and it's a very bold claim, but we've done the math and this works out. So we assume that you invest your current max contribution room of $95,000 into Oz Capital MIC. And the second assumption is that you keep investing the yearly $7,000 contribution, adding to your account each year. By just doing this, in just over 21 years, your TFSA account will cross $1 million. Remember, we're only starting with $95,000 and adding another $7,000 annually for a total of just over $240,000 in contributions during that time, the 21 years. This is an awesome illustration of what Einstein meant when he said, compound interest is the eighth wonder of the world. And then we'll jump on to the next slide. This is still, we're talking about the TFSA here. This one is more for those of us who are perhaps feeling the need for extra cash flow more immediately and don't want to sit on and wait for that money to grow. So you might be feeling the pinch of higher prices. I know everyone is, I know I am, and would like to subsidize your current monthly income. Well, got some great news. By investing that $95,000 max contribution in your TFSA with OzMIC and taking the monthly distribution, from day one, you can receive over $700 tax-free in your bank account every month. Now, we've ran the numbers for a few other scenarios, so you can wait, let's say you wait for about a year or two. Again, that number grows. After 1 year, you can get almost $800 in your bank tax-free. If you wait for 2 years, that total grows to over $850. And then you can see further down again, if you wait for 5 years, that's $1,100. And after 10 years, that's $1,700, over $1,700 per month, tax-free in your bank account. Just think what you could do with all that extra income. Maybe a romantic dinner out with your partner, then followed by tickets to a concert or a hockey game, and you would still have enough money left over to invest in your kid's future. Which brings us to our next topic. RESPs, Registered Educational Savings Plans. For those of you who have kids, you can no doubt relate to wanting to provide for their future, much like my parents did for me. One of the best ways to ensure your kids thrive is to provide them with a solid education. Now, this one shocked me a little bit when I initially looked up the data. The average cost of a 4-year degree in Canada, including residency, is approximately $96,000. That's a lot of money. By investing into an RESP plan early in their childhood, you can plan for that university education and ensure that they have the tools they need to succeed in life. So the chart you see in front of you is a case study that I've developed, which shows sort of an optimal scenario, optimal growth scenario for an RESP plan. This presupposes a few things. And again, I'm not going to get into exactly why we set it up this way. We can always talk about it later. Again, I'm here to talk about these kinds of things with our clients one-on-one. But essentially, the things that it presupposes is that in your first year that your child is born, you invest $16,500 in the RESP plan. And then you continue adding $2,500 every year up until the age that your child turns 14. And in year 15, you finish with your last allowable contribution of $1,200, which for a lifetime maximum contribution is $50,000 per child. So what this does is that by the time your child turns 18 and is really no longer a child, their RESP invested with Oz Capital MIC will have a whopping value of almost $200,000. Okay, that leaves a very healthy cushion for education, and then above that for books, laptops, or even a secondary degree like a master's degree after they finish the initial 4 years of school. Okay. Additionally, unused money can also be potentially transferred into a second child's RESP plan And then that money can be used by the second child, or it can potentially be rolled into the parent's RRSP plan. So this is all generalized. Again, there's a lot more rules, and RESP is fairly complex. I'd be happy to share the details behind this with you again in a one-on-one meeting. We'll chat about that later. So the last case study that we come to is, again, as I've mentioned, something that's near and dear to my heart. And I kind of always think about my parents' retirement when I talk about this part. So did you guys know that you must convert your RRSP to a RRIF account before you turn 71 years old? Well, at this point, the government requires you to start drawing income from that retirement income fund. Now, these prescribed withdrawals, as they call them, are expressed by a percentage of your RRIF account that increases year after year. For this case study, we look at two charts together. So you see the first one on your screen, and we'll look at the second one shortly thereafter. Both charts essentially show a what-if scenario. What if you have $200,000 in your newly converted RRIF account? Here we look at ages 65 to 100, because 65 is typically when most Canadians choose to retire and do the conversion to start taking the RRIF withdrawals. So we look at two hypothetical investment scenarios. Investing that $200,000 into a high interest savings account, we use a 4% interest rate, which is probably fairly generous because I think those have been coming down, but in any case. And then the other scenario is investing it into Oz Capital MIC, which is currently targeted at 9% per year. So the first chart that you're looking at right now shows your RRIF account balance, including or considering the prescribed amounts being withdrawn annually. You can see that due to the higher yield that's afforded by Oz MIC, your RRIF balance continues to grow up until the age of 85, where it tops out at over $350,000. Remember, we started off with only $200,000. And from there, even by age 100, your RRIF account still has almost $110,000 left to pass along to your heirs. The high interest savings account, by contrast, starts declining in year one due to the fact that the 4% interest that you're getting, or the yield that you're getting on that high interest savings account, is not sufficient to cover the prescribed withdrawals. Which leads us to the next chart. So this chart shows those withdrawals that we were taking into account from the previous chart. So these are annual withdrawals for every year. Again, like I said, the amounts between those same ages of 65 to 100. You can see that those amounts invested into the HISA RRIF are significantly lower than the amounts that you receive with Oz MIC. At their peak, the annual cash flow from Oz MIC is almost $50,000 per year, versus the max from the HISA tops out at just over $12,000. Again, these scenarios are illustrative and don't take into account things like taxation, your personal financial retirement goals, your financial situation, and all the other nuances that go along with that. But I'd be happy to sit down with you on a Zoom call or over a coffee and walk you through your specific situation and how we can help. So let's switch gears and bring it back to our initial focus, you, the investor. We've made it easy to invest in Oz Capital MIC. I am a licensed dealing representative with the Ontario Securities Commission, and I'm here to ensure a smooth process from our initial consultation all the way through to opening your account and investing with Oz. We treat our clients as the most important part of our business and ensure we support them every single step of the way. We provide a stable and reliable investment solution, which is professionally managed by our seasoned team. You can invest directly with us without going through a middleman, or you can invest via your financial advisor. Additionally, Oz MIC is available in all the different account types, registered, non-registered, what have you. Most of all, we aim to get rid of the unpredictable when it comes to your finance. We know every client is unique, so let us take the guesswork out of your financial future. I'll personally be your financial concierge and reach out to everyone that joined us here today to discuss how we can help you achieve your financial dreams. Please feel free to call me anytime for a conversation about your financial goals. The number you see on that screen is actually my cell phone, so take it down and feel free to give me a shout. Thanks everyone for joining and for listening to me. Let's open it up to some questions. Any of us on the call can take these questions, but please feel free to add anything in the chat, or I think we've got a couple of questions here that came through via email from a couple of people. So maybe I'll give it a second and we can go from there. Okay, so I'll just quickly so Oleg, this one I think would be best suited for you. So this question here comes from an email that we got with respect to our interest rate expectations for 2024. Do we think that Canada is going to start cutting midway through the year? And where do we see that impacting our business and the real estate markets?
Thank you so much for this, Dennis, and good afternoon, everyone. It's interesting because I'm willing to swear that every time if I would have a dollar every time someone would ask me this question, I would literally have millions in my portfolio in addition to what I'm building at this point in time. And the truth is that it really is $1 million question, because just like real estate, conversation about interest rates is a fairly concerning subject. So what I'll try to do is, on a very, very high level, without getting into economic particulars, I'll give you a high level, but a balanced answer as to what I personally think is going to end up happening in terms of interest rates going forward into the new, kind of projecting into the future. So absolutely, we believe that rates are going to start going down. And there's a decent likelihood that rates are going to start going down at a certain part of the second part of the year. So probably Q3, going into the Q4. And if the rates are going to start going down, chances are it will be 0.25% at a time. Having said that, I think it's important to note that we're very closely monitoring the state of economic affairs in the United States. And as we are looking at United States making rate decisions, more often than not, we follow suit. Now, in the event that we are the ones to drop and US stays, it's going to have a fairly negative effect on our currency and many things as a result. So we've got to look at both sides of the equation. From the perspective of, so we're very much dependent on the US. So we continue to monitor this fairly closely. From the perspective of the core inflation, yes, it's going down, but obviously we feel that things are getting a bit more expensive. Anything outside of the core inflation, so the food, the energy prices, and that's why, in conjunction with the carbon tax and introduction of the new minimum wage increase, for those of you who are watching Tiff Macklem's rate announcements and presentations, people are asking him these questions and he's very hesitant. He's kind of shying away from answering the questions just because only a few years ago he was saying, oh, rates are not going to go up. And look where we are right now in the state of the economy. So the reason why she's shying away is because he doesn't really know what's going to happen. But the outlook is favorable in terms of rates. As I mentioned before, rates, from my perspective at least, are going to start going down after the second part of the quarter, in the second part of the year, gradually, 0.25% at a time. Bottom line is the high interest rate environment is highly unsustainable for any economy. And we're fairly confident that we're approaching that peak where rates are going to start making its way down, allowing for a better affordability, a much increased real estate sentiment, where people are going to be more comfortable in terms of looking at buying real estate, and as such, we're looking favorably in terms of the rate expectations and the rate decrease in the near future.
Thanks for that, Oleg. We do have a couple questions in the chat here. I can take these or you can. I'll just read them out. So I think Karen's asking, what are your minimum contributions? I'll address that since I haven't spoken enough today. So our minimum contribution, Karen, is $5,000. So we've tried to keep the barriers to entry as low as possible. This is an exempt market product, which without getting too deep into it, you do have to qualify at a certain level. But we are, either for accredited investors or eligible investors, which typically most Canadians will qualify through one or two of the exemptions that I just mentioned. And then got another question here from Sandeep. How long are the funds locked in for? Do you want to touch upon that, or do you want me to go in there, Oleg?
Yeah,
Go ahead.
absolutely. So the way it works is when investment is into the fund goes originally, there's a back charge for the 3-year period, and it's fairly reasonable. If you make a withdrawal of funds in the first year, it's 2% of the total investment amount. If it's in a year 2, it's 1%, and year 3 is 0.5% of your total investment. And after year 3, it's absolutely free. If the MIC obviously is yielding 9%, as we're projecting forward, and you hold the money for the year, and you have to take the money out, by all means you can. The 2% charge and the 9% return, you're still up in terms of your investment. And it's basically, the redemption is as simple as a 90-day notice that gets sent to us, and after the 90 days, you get your money.
Yeah, so the simple answer is that they're not locked in. It's just we don't like people moving in and out too quickly because mortgages aren't the most liquid of products. We do have quite a bit of turnover. So we're happy to accommodate requests, providing the notice is given to us. Anybody else in the chat? Does anyone have any questions? And again, any of these things that you guys that might be coming to mind or come to mind after the call, I'm gonna reach out to everyone personally. Hopefully, if you're interested, we can book a quick meeting and I can answer all the questions that you might have. Oleg, I don't know if you want to add a couple closing remarks here before we let everybody get on with their day.
Absolutely. I'm going to try to keep it very short. So I was just yesterday, as I was preparing for today's presentation, I was looking at some stats, and here's what I found. And here's where the confidence comes in from our team and the industry professionals. I was looking at the population in Ontario specifically, never mind Canada as a whole. And I found interesting facts. Just in 2019, the population in Ontario was 14.57 million. 2023, 15.61 million. So the golden question is, where does the confidence really comes in? How do you know that the real estate market is going to be stable in the future? Well, 1 million new people coming in, a portion of them are going to be homeowners, but they still need to live somewhere. So if this is the case, there's really going to be an upward push on the demand. And whether it's affordable living or single family dwellings, we see the market in Ontario specifically being very, very balanced and very stable in a near perpetuity. And obviously, if this is the case, then it gives us the confidence knowing that we're dealing in the environment that's not going to be sporadically changing, but more of a stable environment. In closing, I would like to say that as former investment professionals, as MIC owners, we think that right now probably is the best time for investors to take a look inside their investment portfolio, give Denis a call, have a conversation around your financial situation, and see where Oz Capital MIC can help you ultimately achieve your financial goals. Denis is a very, very knowledgeable professional, both on the retail and institutional side, and would be happy to sit down with you and go over the numbers and go over your situation and share his knowledge and wisdom with you. So we suggest that you pay this your highest attention.
Thank you for that, Oleg. And just as you're closing that, we just got another question here from Maurice Hamilton. So the returns are he's saying the returns are automatically reinvested, correct? So you can make the deposit and forget about it, and it will continue to grow and agree. Correct. So you have the option, Maurice, to as I said, we pay a monthly distribution. We can reinvest that distribution on a monthly basis, and that's how you get to those impressive results, like where we talk about becoming a TFSA millionaire through compounding on a monthly basis. Your account value grows. And then again, in the income scenario, for those that might need some extra supplemental income during these times of super high prices and all the new taxes that everybody's trying to impose on us, and by everybody I mean the government. This is where we can turn it's almost like a tap. You can turn it on and turn it off, so it's very flexible in that way. Again, those distributions are not affected by what we spoke about with respect to the early sort of redemption, like the 2% in the first year or the 1% in the second year. The distributions you can take day one, we won't take any of that back. You'll get the full amount. And again, if it's in a tax-free savings account, you don't get taxed on that. Other accounts, you might have tax implications. Again, it's a question for another day. Another question from Penny just came in. This is good. We're getting lots of people coming in. So Penny's asking, can investors see their investments in the MIC on their stock account like BMO Investor Line, or do we just see the amount in the Oz account? So twofold. Yes, it depends how you invest with us, because there's different ways to invest with Oz. You can invest directly with us. Again, depending on the type of account, we have a custodian or a couple custodians that we work with, where you have a similar sort of online kind of profile that you would see with any other brokerage, where you could see your holdings, you get reports, all of that kind of stuff. You can also invest through a financial advisor, where if you have somebody that manages your wealth for you or manages a portion of your accounts with you, again, they can purchase the fund on your behalf for your accounts. And again, BMO Investor Line specifically, I think, is a self-directed. We do work with some self-directed, but we would have to look at, I don't know that we have any BMO Investor Line accounts currently. We'd have to look into that further for you. But again, reach out to me and I can take you through all of that stuff in more detail. I think that's it. I think this is again, if you guys have any other questions, I sent everyone on this call an email, and that was a personal email that I sent yesterday morning. So you should have my email address. You'll have my personal contact info in there as well. Please reach out to me. I'd be happy to chat with each and every one of you guys. Thanks so much for joining us here today, guys.